Video today. I want to give you guys an update on the stock market. Now, if you're new here, a sub would be appreciated as I provide valuable educational content every day. And if you enjoy the video, please smash the like button for the YouTube algorithm and for us to help reach more people out there. And just let me know down in the comments below exactly what it is that you'd like for me to cover in my next video. Now, I spoke about the NAS100 on Sunday when the market was sitting at this level, and I explained all of the reasons why we can see the market start that dump to the downside. Now, if you follow that analysis, you sort of probably caught over, I think, just over 3,000 or 4,000 pips. And if you look at it at a total combination, you'd have caught 3,000 pips per stock, which would have given you 9,000 pips overall. And if you did, well done to you. If not, then maybe you'd be able to catch the next one. Now, if you were wondering exactly why the stock market took a dip to the downside, and someone probably told you that we are at support, that we're at resistance. No, this is not what happened when the market is trading at support and resistance. Yes, price action needs to be taken into consideration, but if you look at the NASDAQ, the only price that it had reached was this structural level over here. There was no most recent structure that took place, and for the market to dip so aggressively, it's a 50% pullback in a space of 2 days, what the market had acquired with the lateral part of last week. Now, it's important to understand how this happened before we go to what we can expect going forward. Firstly, we know Powell's coming out today, and he is going to have he's going to speak today, which is Wednesday. Federal Chair Powell's going to speak, and we know when Powell speaks or testifies, it's always an update on the economy and how it's going and what the plans are moving forward. But I want to take you guys back to last week Friday. Firstly, we have to understand why the stock market rallied to the upside first, and I spoke about this there as well. First, we had the Michigan inflation expectations that came through lower as expected. Now, normally what this means, it means that consumers are expecting inflation to drop in the next 12 months, right? Now, when inflation goes down, it means that interest rates can come down as well. With inflation going up, interest rates goes up. So when inflation comes down, interest rates goes down. That boosts consumer sentiment to spend more money, and as a result of that, the stock market goes up. If it's the other way around, then that means, if the consumer confidence goes down, or well, if it is negative, then that means they expect inflation to continue in regards to how it is now. As a result of that, they're expecting inflation to increase, meaning they're expecting interest rates to hike, meaning they're expecting to spend less money, and as a result of that, the stock market see that as a negative. Now, next thing we need to understand, and as a result of that, because of this sentiment, the stock market took a nice bull run between last week, or for the lateral part of last week, especially on Friday. We saw this massive bullish candle coming out of nowhere. That was a very good move to see for the NASDAQ, closing off at 5% for the entire week. However, yesterday we had the consumer confidence that came out. Now, this is how they chase the market up and down. Now, if you don't know what the consumer confidence is over here, my good friends, the consumer confidence is an economic indicator that measures the degree of optimism that consumers have regarding the overall state of a country's economy and their own financial situations. What that means, basically, it is what it say it is. So this means that now they use this indicator to indicate whether consumers are confident that the economy is going to recover over a 12-month period or not, which is quite funny because not too long ago they expected inflation to go down, and now for some reason their consumer confidence has dropped, and as a result of that, the stock market was like, well, if you guys are not confident that things are going to get better, then we might as well start selling. And that is exactly why we saw this massive bearish candle that came through and ran through the market. Now today we do have Powell coming through there, speaking, testifying there as well. But we are going to look at what we can expect from a technical perspective ahead of Powell's meeting there as well. Next up, we do know that China has reopening. China has now started opening their supply, because there was a huge supply issue from China because they went into COVID and all of that stuff. But again, that's not enough to restore investors' confidence. Okay, so things are not looking too good for the stock market. Now, a lot of you might think, is this ever going to end? Where is this going to go? Well, nobody knows. What we do know is that the NASDAQ 100 is expected to pull back before the continuation to the downside. Yesterday, Qualcomm jumped a lot of points after analysts predicted that Apple will use its 5G modems that says that Apple has failed in its own 5G chip development, and it will continue using Qualcomm chips. As a result of that, the share price for Qualcomm had obviously increased, and as a result of that, we could potentially, not just because of that data, but from a technical perspective as well, the long term is still bearish on this market. But yet again, we can expect the pullback before the continuation, because that's how the market goes. It brings an impulse, a correction, and before the continuation. Now I'm just going to start on the daily time frame. I do have power cuts coming through in 10 minutes, so I need to be done on the video and I have to upload it. So basically what we have here from a technical perspective, we can obviously see how the market had broken above the strong level of resistance. Now once resistance gets broken, it becomes support. The market had also printed this massive impulse. After an impulse, we got the correction. Now if you take a Fibonacci from the low to the high, we can see we just broken below the 61.8, but the market is still within bullish territory for the short term. So there's definitely a pullback expected in this market. If we do need to see a continuation, I'd probably say that if you take your Fibonacci from the low to the high, I'd probably say that we'll probably see the pullback to this level over here before we see that continuation to the downside. Now as a short-term buyer in the market, I'd probably anticipate the market to go and hit that level before the continuation to the downside. Alternatively, if all else fails and the Dow Jones does enter this support, we can expect a break below, and on that retest for that previous level of support turning resistance, we're going to start looking for sells. But the bias from where I'm sitting, my friends, is expecting this short-term upward pullback to the upside there as well. Now on the US30, we've got similar price action. We have this impulse, we got this correction. This looks like a 61.8 pullback and not a 78.6. We also have the market broken above the strong level of resistance, and the market came back, tested it as support. Now if you take your Fibonacci from the low to the high of this impulse over here, sorry my friends, there and there, we actually had a 0.50% pullback, which is normally expected after a correction. You always expect the market to pull back 50%. Now if you don't know what that means, it's basically a 50% retracement of this massive impulse. Again, we can expect this market to continue rally slightly higher. We could be at the start of a consolidation phase there as well. Now we'll probably sit here for some time, but if we do get a break above or below either levels, again the expectation is for the market to go and hit that level first. Alternatively, if we do break below this level, then that's what we're going to see it doing. So the market would print and head inside this pattern, which is considered a bearish pattern from a technical perspective. Alternatively, a break above this level would then make room for the move to the upside, which is something I'm not going to bank on there as well. SNP500, similar price action over here. We had this massive impulse, got that correction, we had the break of resistance, now turn support, taking a Fibonacci from the low to the high over there. We can see that's also a 50% pullback. Definitely a slight correction expected. Either a continuation or a correction expected to the upside. But once again, I see this happening here for the stock market just for the short term, and then potentially see the sales takes place once again. Now guys, that's all from my side. Thank you for your time, and as always, cheers for years.